What's up, guys? How you doing? Bitcoin Bully here, back with another update. Crypto, here we go. Let's dive into the charts. I'm excited to talk to you today. We're gonna just assess where we're at, where we thought we were going, and where we think we're gonna go in the future. But firstly, if you like my videos, guys, and you find it interesting, please remember to hit the like button, subscribe if you haven't already, tick the bell for notifications, and share it with a friend. All right, let's dive on in. So the couple of things that I want to show you is that usually when I come up with price targets, it's pretty far in advance. And then as we approach the price targets, I make sure that I don't change my mind because it suddenly gets really, really scary. And you hear everybody talking about their new updated price predictions. And if you start listening to other people when you've already got a plan, then it's very easy to get fucked. Right now, everybody thinks that we're going lower. Every single trader that I speak to, every single person on YouTube that I listen to. So it sits there and it's like, holy shit, it's very, very hard to stay composed when everyone's thinking the same thing. And then it's like, and they've got some valid points. It's scary right now. But when you come up with price targets, when you're not emotional and when there's no extreme fear in the market, it's really important to stick to it. So we were chatting back here. These are all in March, right? March when the price was in the mid 40,000s.
At around the $22,000 mark. Price target, somewhere around the 20, 21 and a half, 22, like that. I'm expecting about a $23,000 Bitcoin at some point in the next 2 months. Pitch lay through, we pick up Bitcoins.
So, that's video one, right? And the second video that I want to show, why I show you that is these low $20,000 price levels, they were expected. And so we're in a position right now to be like, hey, all right, it's down where we wanted it. Let's assess the game plan. Are we on the right track? Does everything still seem valid? Nothing's changed in my eyes right now. So we're in a good spot and I'm happy with where the market's at. One more video that I want to show you is also from 2 or 3 months back. I think it's just important to re-watch these because then it drills into your head, okay, you're safe, everything's going to be okay, this was expected, let's reassess and move forward from here. So watch this, I find it really interesting as well.
Really perfect. Rally up, create a high, come back down, rally up, break through the all-time high, and then just come back down and retesting that area as support. So it's just been a resistance into support flip, and then we're going to be off to the races again. So, the things that I'm thinking of right now that I think would be the most valuable for you is obviously don't try and I'm going to start entering anything below $23,500, right? I think that there's a chance that we come down into the teens. I'm going to probably be all in by the time we get there, and that's okay. I don't mind not getting the bottom. What annoys me more is not getting a fucking good position at the start of the next bull run. If I'm waiting for 22 and it only goes to 23 and I don't get back in, then I'll go insane. So I prefer to get in 30% off the bottom rather than try and pick the bottom. So, and you use a dollar cost to get there, and that's okay.
All right, so that's exactly what happened. As soon as we started breaking into the 20s, I just started averaging in quite aggressively. And now I'm all in and I'm buckled up. And worst case scenario for me is if we go down to the low teens, then I'm just holding, right? I'm not gonna get shaken out, I'm just in now. I really value stacking as many Bitcoins as possible. So I would prefer in the long run to just get in and bunker down. But I also think we have just bottomed. So that's just my opinion. Obviously we can go lower. This isn't financial advice, but I do think that we have bottomed. Now, let's have a look at where we're at. Just to recap that, these price levels were expected. So it's not a moment to freak out. Even though we expected it, it's still scary, but we've got to remain composed. The people that are calling for $12,000, $13,000, $14,000 Bitcoin, none of them were talking about a $20,000 Bitcoin 3 months ago when the price is at $48,000. They just weren't. I don't remember anyone speaking about the price going into the teens like I expected. So, I wasn't listening to them back then. I'm not about to listen to them now. You got to make your own mind up, absorb all the facts, you should be able to make your mind up pretty far in advance. None of these things should really surprise you, right? Even back here, when Bitcoin's price was just forming this straight through there, bang, it's just like a beautiful sort of symmetrical triangle. And the symmetrical triangle is a continuation pattern. So this was just expected. And you can see this forming. It's like we knew for like a year and a half all through here. It's like, oh, okay, this is the consolidation period. Once it breaks out, it's going to rip. So we could see price movements like this. I was calling $50,000 to $60,000 Bitcoins in 2019. So now, then when we got there, we didn't suddenly go, oh, you just can't change your mind. Anyway, all right, so let's dive into it. We've done something that really needs to be looked at, an important break of a support line. So these are called the Bitcoin Fibonacci logarithmic regression trend lines. And so it uses Fibonacci levels from the tops and from the bottoms to give you a channel that you've been trading in, right? So, it really helped a lot to figure out where the bottom, where we might find support, and it helped a lot to figure out where we might find tops. And we failed to get anywhere near the top on this most recent rally. And now we've actually had a really clean break of this bottom line. And so when something holds support for 12 years, when it breaks it, you got to be on high alert, because it doesn't mean anything bad. It just means that when we come back up to this red line, it's probably going to be resistance for a really long time. And my honest guess is, I don't know if we ever get back above it. And that's okay, because this red line, it's trending up. So if we just did a little continuation of that red line, it's probably something something like that. So we can still see that, by mid 2024, this log line's up at like 140,000, right? So and that's kind of where my guess is. I think that we, maybe test it once. Every time, I'm telling you this now, every time we come up and test this bottom log line as resistance, I'm going to sell a big chunk of my Bitcoin. And I really do think that in the long run, we're going to get bumped back from that. And I don't know if we ever get back into it. And I'll tell you why. It works really well with this pattern theory that I've shown you guys a few times. And I'll just do a really quick recap of it. Let me hide this for a minute. Is that, every time Bitcoin has found support in a consolidation market, ready? Support. It's where we capitulate through, and it's where we find resistance in the future. And it's the same through here, where Bitcoin's support line, we drag that out. And suddenly the support line is where we capitulate through, and it's also where we found resistance in the future. And it even happened back through here. The support line was through here, and then it ended up being, this one's tricky because Bitcoin price was at 16 cents, but you can still see it. It was the support line through there, and it ended up being where we couldn't get through in the future, and it was also our capitulation point. So there's this weird pattern playing out that I've spoken about a lot. So now we're getting data of the recent price action that helps us look at this pattern and see, all right, if this pattern plays out again, which I really think it's going to, what's the price going to be in the future? So, we had our support line through here and through here. So we can drag that out, and we can even see, it's just so fucking technically beautiful with it. When we came through and broke through that, we came back up and used it as resistance. And so I've got a very, very, very strong feeling that this line is accurate, just because when we broke through it and retested it as resistance, it was just key. So when we zoom out every time, so when it was support, break off, capitulate through, and then we said that at some point, like all these ones, like here, this line now gets used as resistance in the future whenever it comes up and tests it. Now, what I find really interesting is that for the first time ever, this logarithmic regression curve, it's actually lining up. That lines up really, really well with this bottom line. And so if we extended this out, this red line through there, because the red line, now these lines are starting to balance out. So it's not going to keep going up at this angle. It's going to come down a bit, probably down through around about there. So now we've got our support line is matching up perfectly with this log line. And so now, not only in the future, when we come back up to retest, to come back up trying to find a new high, when we retest this support line, we're also going to be retesting this log line. So I think we can use this log line and use this support line to give us an indication of when we're going to sell in the future. I reckon this is going to be gold. This is going to be the trick. I really think that this is going to be the one that allows us to just rip profits out at the perfect time. Now I'm going to use a lot of other indicators, all of your RSIs, stochastic RSIs, using sentiment from people around me. Obviously I'm not going to just rely on this, but if this has confluence with other things, mate, I'm going to be getting the fuck out when we come up to retest these lines. So what I think's happening in the nearer future. So let's have a look at the Bitcoin price right now. I should probably get you a chart that doesn't have so much shit on it. BTC, USD, let's go something like FTX. FTX, let's get rid of this. And let's make, so now each candle represents a day. All right, so where are we at? I do think we just bottomed. So I'm looking for reversal patterns. So what are some examples of reversal patterns? Well, I mean, back here, we had a Wyckoff accumulation. So a Wyckoff would look something like that and off. So we'd form a trading range and eventually find our spring, which would be this one that shoots us off into the future. Is that a possibility? Let's have a look. So one of the things with a Wyckoff range is that we have like a selling climax and then a huge automatic rally. Doesn't really feel like we've had that. We had our selling climax, but it hasn't been this it's called an automatic rally. So I don't know if we're going to do a Wyckoff accumulation. What I find more interesting and more likely is I found it interesting that this was a Wyckoff distribution and this was a Wyckoff accumulation. Now this looks like a head and shoulders pattern. And now I think that this one is going to play out like a head and shoulders pattern. That looks so messy, sorry. So I reckon we've just gone Wyckoff distribution to accumulation, head and shoulders into inverse head and shoulders. So if we're going to form an inverse head and shoulders, let's have a look at what that would look like. You'd have to say that's the left shoulder. We've already formed the left shoulder. That would be our head. And now we're looking for some sort of right shoulder to form. Now, you know, it would imply the neckline. This is interesting through there. That'd be an interesting neckline. So this is probably my first target where I'd consider taking some profits, would be somewhere rally up towards the $30,000 mark, face some resistance, create a right shoulder, and then at some point come and pop through. Now, if this does play out, where to next? All right, so we'll go to chart out an inverse head and shoulder. You go neckline to the point of the head, bring that across and stick that there. So this would give us a price target of 49,000. I just don't think that that's going to happen because 49,000 is actually outside of our it's outside of, remember we got this line that comes through here where we form support on it. Where exactly is it? This chart doesn't go back far enough. It's something like that. It's something like that. And so, you know, that's that line that I don't think we can ever get above again. So I don't think 46,000 that quickly is realistic. Maybe down here in January if this head and shoulders took longer to play out. So, you know, what can we do? Let's zoom back in. Maybe this neckline's wrong. Let's play around with that. So we did have this really kind of crucial line coming through here Dun, 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 dun. So maybe it plays out something like this, where this is actually the neckline. Jesus. So that would look something like this. Come back up. Resistance more closer to 27,000. Come back down. Oh, it's scary. This is going to be scary. Form our right shoulder, and then we pop through. And so if we had this one, we go from the top of the head to the neck, bring that to the breakout point. Now that's what I'm talking about. So, all right. So our first target is around the high 26s. High 26s. Now this is how I'm going to trade it. I'm not going to sell a shitload because I like $26,000 Bitcoins. I really do. I think anything in the 20s to me is just a buy. I'm a six-figure Bitcoin guy in the long run. So 26,000, fuck yeah, give me that. But right now I'm all in, and it's aggressive. So I'm going to, and that gives me the luxury of taking some profits as well, because if I only had 40% in, and then we rally up to here, and then I take, half of that out, but then we just keep on going, then I've only got 20% of my money in. That would really piss me off. So because I'm so aggressively in, not financial advice, because I'm so aggressively in, I have the ability to take a decent amount of profits here. So I can go from all in, then at high 26,000s, I'm going to take just like 20, let's say 20% out. So then if we get the pullback back down to the sort of low 20s, then I can put that 20% back in. And now my bigger take profits area for this year is when we come back up to test this line. So my trading strategy right now, assuming it plays out like this, is going to be take profits in the high 26s, back into the low 20s, and then this price target from an inverse head and shoulders is up around, I need to switch this chart because it doesn't go back far enough. Let's go to all right, so you see what I'm talking about? That's the line. This blue line is where I think we never get above ever again. So that shoots through here. So that means a price target of around 40,000. So I reckon, I don't know if this one's correct. We're going to adjust that, take it through there. Boom, 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 boom. Let's change this. So I reckon that is up, resistance, down, right shoulder, break through, up to there. Cool. All right, so that would be left shoulder, head. This would be our right shoulder tucked in here, tucked in there, and then off to the races. So trading strategy, exit at high 26s, back in at the low 20s, out again at very high 30s, and then just take the foot off the gas to trading for a while. When I exit here, it'll be looking for re-entries down around this bottom red line, so probably around the mid 20,000s. So that's going to be me for the rest of the year. Me for the rest of the year will be, now I'm in at 20, I'm going to get out at 26.5, in at 22, out at 39, in at 26. And that's me for 2022 done. Unless something happens that makes me change my mind, but I reckon we're going to be spot on here. All right, and also, even though I seem very confident with it, I'm only playing with small percentages, right? I'm not taking everything out at 26 and everything back in at 22. It's like I'm taking 20% out at 26 and I'm putting that back in at 22. Then I'll take 30% out at 39 if we get there and put that 30% back in at 26. So I'm not being super aggressive with the trades. Okay. Just something looking at the macro economy, just to wrap up is the Fed keeps smashing interest rates up, bumping interest rates up, and very aggressively, 0.75%. It's like the highest interest rate hike in like 30 years or something ridiculous. Now, there's two types of inflation. There is demand pull inflation, or demand push inflation, demand pull inflation, and then supply squeeze inflation. So there's demand and supply. The Fed raising interest rates, all it can do is crush demand. The Fed raising interest rates can't fix the supply chain issues. Demand destruction is happening right now in a huge way. Everybody has just gone, whoa, okay, hands in my pockets, I'm sitting on the side for a bit. No one's going out and spending aggressively right now. It's just everyone's put the foot on the gas. And speaking of gas, the gas prices are high because of the supply chain issues. Demand for gas hasn't suddenly gone ballistic. So it's supply chain issues. And the Fed knows this. Can crank interest rates up because it has to right now. There's an obligation. Inflation's still going up. But there's going to be a moment where as supply chains start to free up, everyone has lots of inventory right now. So there's lots of supply that's started to build up in a lot of areas, and demand's getting destroyed. So I reckon inflation's going to roll over soon. And in history, the market bottoms have been as inflation has reversed. So we're waiting for inflation to reverse to get a bit of a confirmation that the markets should be able to take at least a breather for a while and have some serious sort of rally off the lows, because they've been getting punished. Yeah, but I think that they can't keep jacking interest rates up because there's too much debt in the world, and they're already sending us into a recession. So they need to actually find that balance. They can't change, the interest rate hikes aren't going to fix the supply issues. They're just looking at demand, and demand's getting smashed. So they can't keep doing 0.75% interest rate hikes. It'd just be ridiculous. All right, that's it for me, guys. Hope you enjoyed that video. If you did, don't forget to hit the like button, subscribe, share it with a friend, and put a comment down below. You know I love the comments. You can guarantee I'll write back to you. All right, peace and love, my friends.